Welcome to the special edition of Investors Insights. Our topic today is productivity, the importance of productivity, and why we need to be worried about that. Trey Booth, you gave a great explanation at our Portfolio Strategies meeting about productivity in comparison to low unemployment. We're seeing headlines, media about low unemployment, but the real number we need to be focused on is productivity. Agreed?
I completely agree.
You went in this tremendous rant, and I'm telling you, go back into it because I think our viewers need to hear about it.
Well, so why is productivity so important? Because productivity leads to valuable growth. And so GDP growth is really population growth plus productivity growth. How many workers are there? And then how productive each worker is. And then if a worker is producing more per hour they work, that turns into positive real GDP and then also earnings for companies. Companies make money and then that person can earn more money. So you see salaries go up.
Right.
For the last few years, we have had no productivity growth. There's a lot of talk and concern, are robots taking our jobs? Well, if robots are taking our jobs, they're not very good robots because they're not more productive.
Right.
And so I'm less and less concerned about robots taking jobs and more concerned about, well, what kind of jobs are we creating?
Okay.
And so historically speaking, when unemployment numbers go down, jobs go up, GDP goes up. It turns out it doesn't look like that's always the case. Lately, we've seen jobs numbers go up, unemployment go down, but GDP is not going up. Why is that? And there's a lot of good theories out there, and one of them that I think makes a lot of sense is that it's the type of jobs we're creating. You can either make something or watch someone make something, and we're creating a ton of jobs of people just watching.
Right.
You have a lot of compliance and banking. You have a lot of HR staff. You have EPA staff within the oil industry. These are people that are added. They're paid a good salary. They provide a service to the company that is needed, but they don't make that company more productive. So you have an extra employee that's not an extra layer of productivity.
Okay.
That employee may help you keep the pay you have, keep the customers you have, keep the government off the back, reduce your cost of regulations, but it's not making you more productive per hour. And so until we reduce that unnecessary burden on companies to have to hire people to ensure that they're just in compliance, then you have these jobs that while it's great for that person to have a job, in terms of net to the economy, we're no better off. And so that's how we have this very huge fall from over 10% unemployment to below 5%, almost 4.3% unemployment right now, and yet we see no growth because people aren't being productive. If you aren't being productive, then there's no real growth. It's all nominal. And so we're really worried about wages going up. Well, wages aren't going up, so there's no inflation. We're really worried about robots taking our jobs. Well, we're not being productive enough to require that, really. We have all this excess capacity. If you want to get to 3% GDP growth, everyone says that 3% is impossible. Well, you have between 1% and 2% growth in population. All you really need is a 1% to 2% growth in productivity. That's not that hard. We've done it for a long time.
Right.
Yet right now, for some reason, we think it's impossible. We're ecstatic that GDP or productivity growth in the first quarter went from -6 to 0. We're ecstatic about flat. It's really kind of embarrassing for an economy, our level of advancement, that we can't get productivity above 0. I think we can. We just have to watch for the ways that we're being unproductive.
And so in our vlogs, we've talked about we've been in a recession of confidence. Mm-hmm. And so what you're saying is that the fact that they're talking about lowering or limiting regulation has freed corporations up to go, hey, we've got to get productive.
Exactly, and you don't have the training lag, because you take employees that are already working for your company, know your company in and out. They're just in the wrong position, and you transition them to a more productive side. So now the companies don't add additional costs; they just add pure productivity.
Right, and productivity leads to great corporate earnings.
Leads to profits.
And great corporate earnings impact our clients' portfolios.
Stock market goes up. Mm-hmm.
Exactly, and that's the strength that we're seeing right now.
That's right.
In anticipation of productivity increasing.
Correct.
So on that note, we appreciate you taking time to listen to our thoughts on productivity, and hopefully it's been beneficial for you and information you can use as it relates to your portfolio. Have a great week.